Industries talk about the impact of high crude oil prices, what the outlook is on demand trends as well as volumes. V. Venkatramani, the CFO of the company, now joins in on the show. Good to have you on board. To begin with, give us a sense of what the impact has been on the huge increase that we've seen in crude oil prices. How has this impacted your input costs?
Good morning, everyone. Yes, crude prices have had a significant impact on cost this year. If you look at pre-COVID levels, so our food and chemical ratio for the MDF segment was 65-35, whereas now the mix has moved to 51-49. So there's been a significant increase in chemical prices because most of the chemicals that we use are derivatives of crude. But we have not been able to establish any direct link between increase in crude prices and increase in chemical prices, because other factors like demand and supply, availability of material at ports, because some of the materials are not widely available in India and rely on imports. So, it takes time for the pass on effect. So increases happen possibly with a time lag, although we have not been able to establish any definite time lag.
So, Mr. Venkatramani, wanted to understand what is the impact then of this sharp surge on in crude prices on your margins and profitability eventually?
So far, demand has been strong this year. So we have been able to pass on the cost increases and maintain the gross margins. In fact, we have been able to improve the gross margins slightly, which reflects how strong the demand has been this year. So yes, going forward, I think we will try to maintain the gross margins at this level. Although any further increase in raw material prices, we'll also have to look at demand conditions at that point of time before deciding whether we can pass on the cost increases.
Since you've talked about cost increases, you've already undertaken a 25% price hike in MDF in the 9th months of FY22. Can you take more price hikes without actually impacting the demand, considering you're saying up until now the demand has been buoyant, but can you pass through the price hikes easily?
No, I wouldn't say we can pass through the price hikes easily, because like I mentioned, it will depend upon demand conditions at that particular point of time, because we don't know when the chemical prices will increase. It could happen with a 2-month time lag or a 4-month time lag. So it would depend upon demand conditions at that point of time. If demand conditions continue to remain strong, we will be able to pass on the cost increases in full. In case demand is experiencing any slowdown, we'll possibly have to take some hit on our margins.
Okay, fair enough. And give us a sense as to how much of your current raw material is imported, and is there any major impact that we could see on import pricing?
No, most of our raw materials are procured from domestic sources. Wood is procured from plantations around our factories, and the chemicals or the chemical resins are procured from domestic manufacturers. Although at times, if there is any significant gap between domestic and import prices, we do buy small quantities from traders who import the materials into India. But most of the time, I would say more than 90%, 95% of our raw materials are procured from domestic sources.
Okay. Mr. Venkatramani, the analyst community is a bit worried about a slowdown in the macroeconomy, weakness in the real estate market, and a high concentration of the company in the MDF industry. What would be your response, and how would you like to, alleviate some of these concerns?
Okay, we have been having a very strong volume growth over the past 3 years. We have grown at a CAGR of about 35% annually in MDF over the past 3 years. And if you look at our growth targets for the next 2 years, I think we will see some limitations because of capacity constraints. So we'll probably target a volume growth of 15 to 18% for the next 2 years. So I don't think there will be any significant pressure, on our realizations or margins because our growth targets are much lower than what they used to be in the past. So I think yes, for the next 2 to 3 years, we'll have a target of 15% volume growth in the MDF segment.
And then walk us through what the outlook is when it comes to ready-made furniture. Are you seeing strong demand there as well?
Yeah, we are seeing significant increase in demand for ready-made furniture because MDF is primarily used for manufacture of ready-made furniture. I would say, most of it comes from the commercial segment. Almost 70% of our volumes are consumed in that segment, and about 30% goes into the residential segment. So looking forward, I think at the moment over the past 3 years, since there's been a significant slowdown in real estate, we have primarily been taking away market share from the cheap plywood segment. And in case we start seeing improvement in the real estate, we'll primarily be dependent on reduction of inventories in real estate. That should give a significant boost to MDF going forward.
Thanks so much for sharing with us your outlook as well as how you plan to grow your overall margins and the demand scenario.